I think it was Sir Humphrey Appleby in Yes Minister who said, "Never believe anything until it's been officially denied." And yesterday, Saturday the 28th of June 2025, Lotus officially denied that it had any plans at all to close down its UK sports car manufacturing operations at Hethel in Norfolk after 59 years there.
Take Norfolk's finest engineers, mix them with a pile of carbon fibre and a sprinkle of British arrogance, and you got yourself a Lotus.
In this video, I'm going to bring you up to speed with what we know so far, but even as I'm recording it, the news continues to unfold.
There's a report in The Guardian 20 minutes ago that says that the UK Industry Minister Jonathan Reynolds is meeting as we speak with Lotus senior management to discuss the future of the plant. So the news is unfolding. I'm going to catch up with what we do know, the financials of Lotus, and give my two penneth on what I think is going on. A bit of context as to who the hell am I to comment on this. I'm a Lotus owner, as you may know if you're a regular of the channel. It's an old Lotus, not a modern one. But I've also got a finance degree and 30 years of experience in strategy consulting and as a strategy director for and in large corporations. So this kind of business side of things is my day job, if you like. I've never worked for Lotus. I don't have any inside knowledge there. I only pick up what I see in the financial reports and in the press. So don't take this as any particular inside track, but I can bring a kind of informed view. Please don't take it as investment advice either. Let's get into it. On Friday, the story broke in the Financial Times that Lotus is expected finally to close down its factory at Hethel in Norfolk and stop making sports cars, certainly in the UK.
The job of the Hethel plant is to make the Emira, Lotus's V6 and turbocharged four-cylinder combustion engine sports car, which is still on sale. But the production line had already been paused some weeks ago.
Lotus says that operations are continuing as normal, but I'm not sure what normal is. There are other reports that the production line was mothballed in May when the 25% tariffs were imposed. Other manufacturers did similar things to manage inventory. Managing inventory is corporate PR speak for we can't sell the things fast enough and we've run out of disused airfields to pile the cars up in. But others have restarted production now. The tariffs on UK exports to the US are falling, I think this week, to 10%. I think that comes into force. It was agreed a little while ago. So yeah, I'm not even sure what normal operations look like in Hethel at the moment.
In any event, this is not a good sign. The Emira is only about 3 years into its production run, so sales should still be going well.
There are various reasons why they aren't, none of which seems much related to how much fun an Emira is to drive, which is apparently a lot, though I haven't had the pleasure myself, or how they look and feel, which is also really very good. Most of the reasons are to do with a downturn in demand, particularly in China. This isn't helped by all those lots of trouble, usually serious jokes, which are a bit of a tired cliche, but if I'm honest, they aren't completely without foundation. James Martin has a very fine rant on his JM on Cars YouTube channel about Lotus customer experience, being a former Lotus customer, and even dealer experience for that matter. I'm reading from this piece in The Guardian, and I'm paraphrasing. Earlier this week, in an investor update, the chief exec of Lotus Technologies, Chingfeng Feng, told investors that the company was looking at shifting production to the US. At this moment, he said, we're discussing with our strategic partners in the US on localization plans in order to avoid the influence of the US tariff. Yeah, there's a couple of reasons why I think this just doesn't make any sense. Firstly, it's been floated as a possibility in the context of avoiding those Trump import tariffs, but since those are only 10% on UK exports, and North America is by no means the only market that they sell in, and given how unstable that tariff policy's proved to be anyway, I can't really see why that would form the basis of a strategic long-term decision to shut down an established factory and build a whole new one somewhere else on another continent.
There is the alternative option of contract manufacturing rather than building a whole dedicated new plant, but even that looks unlikely.
With the gross margins being as thin as they are at the moment, I don't understand how there's enough headroom in there to be paying a contract manufacturer as well. I guess you do get to reduce your overheads. You save on your fixed costs, but then you make a loss on every unit you sell. Why would you go through all the upfront costs, the upheaval, the being out of the market, all of that, when the tariffs are only 10% anyway? It's a prestige car, it's not competing on price. This isn't making very much sense to me from a strategy point of view.
If the Hethel factory does close and the production doesn't move to somewhere else, like the US, then that does rather suggest it might be the end for Lotus sports cars.
It doesn't necessarily mean it's the end for the Lotus brand, though, because, like some of the great Lotus cars of the Chapman era, Lotus itself comes in two separate halves. The bulk of Lotus's operation is in an entirely separate company from the Hethel sports car maker. The electric car business, which is about 56% of sales, is Lotus Technology Incorporated, which is a completely separate business, majority owned by the Chinese manufacturer Geely Auto, but also listed on NASDAQ, the New York Stock Exchange. This company makes the Lotus battery EVs, the Emea Saloon and Electra SUV, in a factory in Wuhan, which is a large city in central China, famous for producing steel, cars, and global flu pandemics. The Norfolk site, meanwhile, is the home of Lotus Cars Limited, which is a separate company again owned by Lotus Group International, which is what used to be the old Group Lotus. According to Lotus Technologies' SEC filings, it's the Norfolk-based Lotus Group that owns the brand, and it licenses it to Lotus Technologies for the purpose of making EVs, and explicitly not for making sports cars. But that licensing agreement could easily be changed because the Lotus Group is owned by Geely's founder and majority owner, Li Shufu. Mr. Li is a Chinese billionaire who founded Geely in 1986, making parts for fridges, getting into car making in 1997 with cars like this, the Geely Haoqing, which looks like a Mercedes C200 jumped over the fence into a field of excitable Daihatsu Dominos. Mercedes is pretty unlikely to be complaining about this shonky-looking knockoff anytime soon, though, because 20 years on, Geely Auto is Mercedes-Benz's largest single shareholder. Let that sink in for a moment. Geely is also the outright or majority owner of Volvo, of Polestar, Proton, which is how it came to own Lotus, the London taxicab maker LEVC, Smart, and it also owns about 17% of Aston Martin. So to sum up all that corporate structure stuff, Lotus, the Chinese battery EV maker, and Lotus, the Norfolk sports car maker, aren't actually the same company, but they do ultimately have the same Chinese billionaire owner. Like so many things these days, all these jobs and the heritage and the history, it's all at the whim of one billionaire. And the thing is that both of these businesses appear to be in a degree of trouble. Because it's a listed business, Lotus Technology, the EV side, discloses its financials under a more rigorous reporting regime. And we can see from those reports that there's a couple of slightly worrying things going on. But before we get into why I think the money's a big problem, here's a bit of historical context about why we should care. Lotus was founded by Colin Chapman in his garage in Hornsey in North London in 1948 when he and his wife Hazel built an Austin 7 Special to go hill climbing in. Things progressed quite quickly and they moved out to bigger premises in Cheshunt in Hertfordshire, where they built road cars and a successful racing team. The growing needs of both of those meant a move to bigger premises, so they picked a disused World War II airfield in Norfolk in 1966 near a village called Hethel, where Lotus cars still are today, for the time being. For a very long time, maybe throughout its whole history, Lotus has in some ways been a model of how not to run a car business. That's a pretty bold statement because it certainly had some glorious moments and built some fantastic cars, of which I'm a big fan, don't get me wrong. The Elan, for example, was a fantastic 60s sports car. The Esprit was one of the definitive James Bond cars. The Elise and all its derivatives were supreme track day cars. The Excel was a brilliant all-rounder with even some decent reliability thanks to some of its Toyota componentry, and the list goes on. But even under Chapman, maybe especially under Chapman, Lotus Cars was less about delighting customers than it was generating cash to fund the racing. There's not a lot of racing goes on these days. There's not none, but not much. But that does still seem to be imprinted into the company's DNA, if you listen to what James Martin's got to say. And back then, in Chapman's day, there was plenty of racing to fund. They won 7 F1 Constructors' Championships, 6 Drivers' Championships. They won the Indianapolis 500 with the Type 38 that was the first winner to have its engine bolted behind the driver, which was just one of Lotus's innovative designs that created the modern format of single-seater race car that we still use today. In F1, they were the first to use engines that were a stressed chassis member, the first monocoque, first with aero wings. They were the first works team to paint their car in sponsors' colours, first ground effect car, the first to put radiators in the side pods, first carbon fibre car, and so on and so on. The Type 72 of 1970 was so advanced that it stayed competitive in F1 for 6 years and it won the championship in 3 of them. It was only really seriously outgunned in the last year. Even the Hethel offices were innovative because they set the pattern for the modern age by being entirely open plan, which was a big deal in those days. This all feels like a long time ago when a few clever chaps with a drawing board and a 2-mile test track on a disused airfield could have a serious impact on car design, whether that was for racing or for the road. Half a century later, both cars and regulations are several orders of magnitude more complex. So changes nowadays tend to be much more incremental and come only as a result of much greater capital investment. So the question is, where does that capital investment come from? The Lotus Technology share price on Nasdaq has fallen from almost $14 when it was listed to around $2 today. That's about an 85% drop in value. So while I'm glad I didn't mortgage my own Lotus to buy in, falling share prices aren't actually what kills businesses. What kills businesses is cash flow. And that's a bit of a problem too. Sales in the first quarter of this year almost halved against the same period in 2024, hit by the slowing Chinese economy, plus tariff wars, actual wars, and frankly all the other shit that's going on in the world.
What is it missing? You. It's missing you.
The company in its statement blamed a lull while awaiting new models, but that certainly won't help. But these are kind of mid-year upgrades, and so the model changes seem pretty minor, and in any case that doesn't normally cut your business in half.
Here's a bit of fun chicanery for you, worthy of Colin Chapman. This is the exact graphic copied and pasted out of Lotus's quarterly report, and you can see, if you ignore the numbers for the moment but just look at the grey and yellow bars, it looks as though there's been a period of reasonably steady growth, decent growth in quarter 4 2024, and then quarter 1 2025 is well down. It's down about half on the previous quarter, and down, if I draw a line across from the first quarter of last year, so 12 months ago, it's down about 20%, something like that. But then if I redraw this chart accurately to scale, which you'd kind of expect the annual report to be, you get a completely different picture. It's down about 2/3 on the previous quarter and almost half on a year ago. It's very much more serious than this chart looks to the casual observer.
And even then, those falling sales aren't really the problem. The trouble is that the cars cost very nearly as much to make, just in materials, as the company earns from selling them. So selling more or fewer of them doesn't actually make very much difference, because none of those cars is making a meaningful contribution to the cost of the overheads. So that's the offices, the sales and marketing costs, new product development, which is critical, and not least of them, paying the interest on the company's debt. That's the technology side. We don't have the same level of transparency for the Norfolk business, but I'd be surprised if it told a dramatically different story, to be honest. So what we're seeing happening is a move to cut those overheads and slow down the outflow of cash.
Lotus managed to chomp its way through over $900 million in cash in 2024, about $850 million of it on loss-making operations and another $57 million in capital spending. To fund this, it raised about $1 billion in short-term loans, which it's presumably going to have to refinance or pay back at some point in 2025. It also raised $1.2 billion through floating on NASDAQ, but it can't keep doing that every year.
I don't know what the financials, the cash flow looks like in the whole of Li Shufu's empire, which is very substantial, but even if there's plenty of money around, he and the other shareholders in the technology business are not going to want to keep pumping in cash at that level. And with the share price so low and debt already building up, people aren't going to want to lend at a reasonable rate of interest. So that kind of business model just isn't sustainable. And that's the other reason why I don't think spending hundreds of millions on a new sports car factory in the US makes any sense at all. The Wuhan plant was reportedly designed for an output of 150,000 cars a year, which is 138,000 more than they actually built last year. In fact, it's more than Lotus has ever built in its entire history. So it seems like there's plenty of capacity there to move the internal combustion engine sports car production across if they wanted to build them somewhere else. But that's the question. Is there the will? They haven't said they're going to do it. They've said, we believe localisation is a feasible plan. That to me just says, yeah, we could do it. Doesn't say they're going to. If talks are going on with the UK government has said that automotive is going to be one of the pillars of its industrial strategy, maybe pointing out that we could move production to the US if we wanted to is actually just part of a negotiating position in order to help try and extract a cash injection from the UK government. Yeah, it'd be interesting to see how all that pans out.
Lotus's reassurances about the future of Hethel are, well, reassuring, but these are still very worrying times for those working in and around Lotus's UK business.
There's about 1,300 people employed at Hethel. It's been a lovely summer weekend in most of England, but not for those families or for those of the other small businesses that supply them. And honestly, I fear for the outcome for them. And while the end of that chapter of history and all that heritage coming to a close is a real shame, it's that's probably the saddest part of all.